Welcome everyone to this video. We are going to be talking about the wheel strategy. So what is it? Basically, we are going to be marrying the cash secured put with the covered call, and it's going to look like what it sounds like, a wheel. So basically, when you sell a cash secured put, you are selling it below the market price. So think of it as the bottom portion of the wheel. And when you sell covered calls, you are selling those covered calls at above the market price. So you can think of it as the top portion of that wheel, and it's just a cycle. It goes round and round and round because we understand that being assigned and being called away is just part of this strategy. But before we get into it, don't forget to like and subscribe. I'm waiting. All right, you've done it? All right, thank you very much. Let's get right into it. All right, so we're going to go into my favorite ETF, SPY, when it comes to trading the wheel strategy. Now, particularly when I don't use ETFs, I like using individual stocks that have good fundamentals that are poised for great growth, but it's also steady. So I use a lot of blue chip stocks with the wheel strategy so I can get great dividends, great capital appreciation, and of course, those premiums. Because when you use ETFs, your premiums are going to be lower because they're not typically as volatile as individual stocks. But if you're worried about what if the stock that I choose goes to zero, ETFs are a fantastic alternative to put more money into your pocket. So of course, let's talk about the wheel strategy. Now, I already said before, when you go into a wheel strategy, you typically start off by selling a cash secured put because we don't have 100 shares to begin selling covered calls. I told you before that I typically sell about 7-day options. Right now, there's 6 days and 8 days when I'm making this video, so we're just going to use 6-day options till expiration. We're on buying a call, which is not what we're doing here. We like to play the conservative route. We like to take money from other options traders that want to play it risky. So we are going to sell a put. And this is how we're going to get into the wheel strategy. So as I said, I typically sell them about 1% out of the money. The current market price is a little bit over $6.75. So if we go down about $7, what are we at? $6.68. So if we sell this put for 6 days till expiration, we would generate $227. But now you're asking yourself, what do I do with this option premium? Well, I would suggest actually taking this premium, putting it back into the underlying so you can increase the amount of shares that you own and also utilize the dollar cost average method to decrease your cost basis over time. So let's say that we've already been assigned. We've sold our cash secured puts for several weeks or several months, however long you want to sell your options for, and now the inevitable happened. You have been assigned. What do we do next? Don't rush. Don't panic. Keep a calm, leveled head. Of course, when you're selling covered calls or when you're selling into the wheel strategy, you should not be married to these stocks because, of course, eventually they will be assigned away from you. You'll be assigned these stocks or they'll be called away from you. So don't be married to these stocks. But we are currently on selling a put. We're not looking to get another 100 shares. So we are going to sell a call. And again, like I said, I typically go about 1% out of the money for a 6-day option contract. So now we're on selling a call. We go up 1%, which is, like I said, about $7. So where would that be at? 82, I think. No, that's $6. Let's go up one more. 83, 683. Now, if we sell for a 6-day option, we would generate $78 per week. And again, what are we going to do with that option premium? We are going to put it right back into the underlying, or you could also put it into a stock or ETF that you want to accumulate more shares of. But I do particularly like putting it into the underlying that we are trading for this strategy because it keeps things simpler. And when you choose ETFs or stocks, you want to choose something that you believe in wholeheartedly. So we continue this process week after week, month after month, year after year with the ETF or stock that we actually believe in. And then what happens? We get assigned. We have these stocks or ETFs called away from us. What do we do next? Well, we just restart the wheel. We go back into selling cash secured puts at a lower price than the current market price. And we do everything over and over and over again to put more money into your pocket. Now, if you have any questions about the wheel strategy, or if you want me to go into a little bit deeper on some strategies that people use that's a little bit different from the actual wheel strategy, put them in the comment section below, and I'll see you in the next video.